and international news. Let's begin with a rather important deal in the IT sector. IT services provider Coforge is planning to build its AI muscle by acquiring US-based Encora in a multi-billion-dollar deal. Coforge is offering $2.35 billion to acquire this US-based entity called Encora. The equity value of the deal is worth about $1.89 billion, which will be funded through a preferential issue of shares. Let's go across to my colleague Jasmeet for more details on this particular acquisition.
Well, right, thank you for that. As rightly said, Coforge to acquire Encora for a 100% share swap deal. While this particular acquisition will strengthen company's AI-led engineering and the data side of the business. Further, the total enterprise value for this deal is at 21,000 crore, which is roughly $2.35 billion. If you look at the investors where the Coforge is buying it out from, would be Advent and other PE holders. If you look at the deal financing company to fund $1.89 billion, that's roughly by issuing 9.38 equity shares on preferential issue to the Encora shareholder at a price of 1,815 rupees, which is at a premium of 8% from the last market closing rate. While if you have seen the Coforge shares, the stock has already tanked almost 10 to 14% over last 3 days. And this particular price at a premium of 8% from that price. Now, with regards to the other balance QIP, the company to go via the QIP or the bridge loan for $550 million to fund the debt which are in the books of Encora while acquiring the total entity. In terms of the combined entity value, we see that the combined entity value to have a total estimated top line of FY27 at $2.5 billion and the AI-led business to contribute $2 billion to the overall EBIT. While in terms of the EBIT, it's expected to come at 14% margin, which is in line with what the Coforge Q numbers were at 14.02%. If you look at the EPS, management remains extremely confident that they will be EPS accretive from the start of the FY27 itself. If you look at the enterprise value, that's $2.35 billion, while the estimated revenue for FY26 for Encora is at $600 million. That is roughly EV by sales of enterprise value is roughly 3.91 times that the company is paying to acquire this entity. With regards to the benefits that the company will see post the acquisition is that company says they'll expand their stance in the US geography as well as in the Midwest of US geography. This will also increase the overall deal portfolio of the company by 11 additional deals of over $10 million, which will come from Encora. Further, the company will also have an addition of 3,100 plus AI engineer experts that will help company grow in their AI space going forward. With regards to the other details, we have also seen that this will also expand and help companies scale the high-tech and healthcare vertical going forward. Further, the combined business, as we discussed, will have over 45 plus clients. With regards to a bit about Encora's background and history, Encora is a US-based digital engineering firm based having a roots out of Silicon Valley. In terms of the estimated FY26 revenue for Encora is at $600 million with an adjusted EBITDA of 19%. And in terms of the overall addition that the Encora will bring the client addition to Coforge is roughly 11 odd clients with a base of over $10 million each. So all in all, we are seeing a positive commentary from the management with regards to this deal, but it's still wait and watch of how the shareholders react to this particular news going forward and how will this deal add to the top line of management going forward. Will it be actually EPS accretive or will there be few one-offs?
Right. Thank you so much for highlighting not just the financing details of the deal, but also a brief history on Encora. But as Jasmeet highlighted, AI-led engineering, data and cloud services alone are likely to deliver $2 billion in revenue by FY27 for Coforge. And here's the CFO, Saurabh Goel, on the company's rationale for this acquisition.
Kawaljeet, Encora has been one of those very unusual assets that we've evaluated and had an opportunity to sit and have conversations with teams around where we found both the runways were very significant. The capability, of course, is cutting edge, and we think it's truly cutting edge. It's evidenced by the revenue per employee metric that we were just discussing. It's evidenced by the client roster that they have. It's evidenced by just the genesis of that firm and where it started off and who it works with. So that clearly was a given for us, and that's the key metric that we looked at.
And to explore this acquisition further and understand the fundamental effects of the deal, we have Rahul Jain, Director Research at Dolat Capital, joining us. Thank you so much, Mr. Jain, for joining us on this Saturday. Let me begin with asking the first question. How does the $2.35 billion valuation of Encora compare to industry multiples for AI-focused digital engineering firms? And does this acquisition represent a premium or value buy for Coforge in the current market?
Yeah, I would say it is fairly priced. I would not say it is expensive or cheap. Because the structure of the deal is largely equity swap, wherein we know that Coforge also trade on a similar EV/EBITDA basis. So that kinds of reflect a similar valuation to what Coforge is trading at. And there is the reason why it look probably slightly more expensive is because we don't know what kind of synergy can come in from a profitability point of view, which management is alluding that post-integration, they can increase the profitability meaningfully. And there is also the debt part of the LBO transaction that they will take they would finance it separately at a reasonable price. So if we take some of these factors into account, probably explain the rationale for the current valuation that we are seeing. Of course, if we look at the current number or the number that they are suggesting pre-synergy, it may look like it is fair to slightly expensive from a valuation point of view.
Okay, all right. So then as a follow-up to that, I'd like to ask you, you said you don't see the deal as neither cheap nor expensive. In your words, it's fairly valued. Do you think it's a win-win situation for both Coforge and Encora? And with the deal structured as an all-stock transaction involving about 9.38 crore shares at 1,815 rupees each, what potential dilution effects do you foresee on Coforge's EPS, and how might this impact shareholder value, if any?
Yeah, at this point, what we are assuming is that only the equity swap part of it, which would lead to roughly 21% kind of a dilution to the equity base. And we are assuming that there is no QIP which may happen. So if that is the case, then we are seeing 5 to 7% cut to our EPS estimate. So it's the dilution to that extent. If they do a further equity at a certain price, then the maths would look different, and this would happen mostly 6 months from now. So, and they also said that QIP might not even happen. So it is also a function of that. So at this point, I think 5 to 7% cut is what we have observed in our FY26, FY27 and FY28 estimate basis the input that we received yesterday.
That's about equity dilution, but also a very basic question that comes to the mind is, in view of this particular deal, which is one of the largest seen, especially from the point of view of an IT services company such as Coforge joining hands with an AI-powered company like Encora, what does this mean for the shareholders of Coforge? And do you think it's going to be an upward trajectory moving forward?
Yeah, I think they have a very successful track record in terms of turning around M&A, driving growth, as well as profitability. That is what we have seen so far with few transactions that they have done in last 7, 8 years under Sudhir Singh. Now we need to see this is a larger bite. We have not seen them doing this scale of transaction prior to this. So of course it would be challenging. Every M&A has its own thing. But I think looking at their track record, we are positive that they should be able to do justice to this transaction as the year progresses.
So the merger aims to create about $2.5 billion entity with a strong emphasis on AI-led engineering, data, and cloud services. What synergies do you anticipate in terms of revenue growth and cost savings for the combined company? And I'd also like to pair this up with the question or doubt on AI bubble. Do you think in an era where everyone's arguing that the AI bubble might burst anytime soon, how do you see this investment?
I would not relate it to the AI bubble that we are talking about in the US market, because that is a lot of hyper leverage and cross structure way of funding those very large infrastructure. All the services business like Encora are involved in the leverage of AI in terms of automation and providing lower cost services. I think that is a way forward. There's not too much risk involved in that because it may happen at a slower pace. And here the thing is that you take the project, you hire talent accordingly. So there's not much risk related to the bubble point of view. This is more like a engineering services business which is leveraging AI. So it's not like investing in AI infrastructure. So there's no risk involved from that point of view if you are worried on that part.
It's important to understand this because at the forefront of the deal, anybody would look at it as an IT company joining hands with an AI entity. But then that's why I asked you this question so that we can get some clarity on that front. But in the context of Indian IT's largest ever deals, how might this $2.35 billion acquisition influence Coforge's competitive positioning against peers such as Infosys or TCS in the AI and digital services landscape?
No, I think that's a very fair question to understand because if you look at this business was a much smaller business just 6, 7 years back, close to $400-500 million. And it is emerging to become $2.5 billion plus in FY27. So that actually puts it into the right stack where it is chasing much larger deal, much larger scope of business as was evident with $1.5 billion plus deal they signed with Sabre just a couple of quarters back. That shows that the management has proven their capability in terms of that they are becoming a large player and they are playing in the same pool as some of the largest company in India is. So that part is definitely what they have demonstrated both in terms of win and scalability. To your other question related to AI, nowadays we know that all of this business are uh, tabled around AI. There's no conversation in IT where you don't talk AI a couple of times. So that kind of AI-led data engineering services, but it's too early days, right? It's not like they have a heavy AI revenue base or something like learn more aspect of it as it get consolidated most likely by Q1 or Q2 of FY27 in terms of what is the AI cut of revenue and how much is the dependency. But I don't think basis their history basis looking at some of the metrics which were shared that the AI revenue would not be significant. It could be possibly anywhere between 5 to 20% zone. That's a very ballpark thought process that we have right now.
Thank you so much for highlighting that, especially given how AI is slowly becoming a core strategic point of so many IT services companies, because maybe that's where the world is heading today. And in that view, you've tried to explain us the significance of this deal and what does this mean for Coforge and its shareholders as well. So thanks so much for giving us your time.